Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for December 14th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. For the most part, price continues to trend steadily higher. We thought that this could be, a rejection pattern here the previous session, but that's why we watched the midpoint up to resistance. We have a clear zone where we're looking for rejection, and if price pushes above it, you know that it's running through the tail and into new highs. And that was something we talked about pre-market yesterday. If price pushes through the 57 to 60 zone, the thing is going to new highs. And we saw how bears were defending it initially, that zone, and then eventually right at the open drive caused a big time push higher. Now we're sitting up here near highs. We're holding above the previous 57 to 60 zone of prior resistance, now support. So we could be looking at further strength here overall. Now we do have the Fed later on this afternoon, so 2 p.m. Eastern, the Fed interest rate decision will come down. That'll give us another key data point to watch. The 1 p.m. Central open price or the 2 p.m. Eastern open price will give us a data point that we'll mark on our charts and use for the next few days, weeks, and even months. So that's something that we're going to watch later on this afternoon. Now this is very important up here because 2257, 2240 in general, very important levels, but any pullback could still be a fantastic buying opportunity for another wave of strength. As long as price continues to hold above 2185, this market continues to grind higher. Failure to hold 2185 would then lead to perhaps a move across this distribution here, but holding this level overall will indicate more overall strength. So even if we do get some sort of pullback here, it could be a fantastic buying opportunity for another round of strength. So we'll see what the Fed brings later on this afternoon. Continue to watch 2260 to 57. Failure to hold that zone, auctions lower. But again, bulls would be looking to pick price up and lower prices for a shot at pushing to new highs. Now on an intraday basis here, you can see very, very tightly coiled price action. It's a fade the range, fade the edges type of day so far. You'll probably see this continue to happen throughout the session, and then it may come in and grind a little quieter. So maybe at RTX, we might do this, right? And then as we head into the decision, we will grind quietly. And so we'll see how it plays out. But overall, right now, it's a fade the edges type of day. Not a lot of pace and tempo, so just pick your spots or stand aside until the Fed, unless there's a great opportunity. But right now, very quiet trading range action so far. All right, let's take a look at crude oil. Here's crude. If we bring up crude in the higher time frame, one thing you'll see is the major rejection and a perfect retest. Again, I've been talking a lot about this in our trading room as well, because this is one of our bread and butter type of rejections, which is where price tests a major zone of resistance, pushes through to untraded territory, and then sees a major rejection day like this. The next day is a midpoint retest right off of the midpoint of that tail, right off of our 5340 key level, and that's a perfect zone to defend as a bear for a shot at seeing a push and a close of the gap at 5150. So this is what we've been talking about in the trading room, is defending this level for a shot at filling the gap, so going back to the close, and perhaps trading all the way back into the previous week's low price, which could be around 49.50. So we could have much more weakness ahead. Right now, the rejection off the midpoint, the rejection of prices above 53.5 and especially 54s has led to a little bit of a pullback. And right now, this pullback could amount to even more movement to the downside toward 43s perhaps. So we could travel all the way back across this range. But first things first, let's fill the gap. Perhaps we move back all the way to value. Maybe we even go across the range from here. We will see how much more we pull back. But overall, it's been a perfect zone, perfect retest entry off our area. Right now, we're looking for at least a fill of the previous week's close there, that gap, and perhaps moving across the previous week's range into 48s. That could be the next kind of swing push downward here if prices can continue to hold below that 53. 40, which is up here. So big time rejection up here, a beautiful picture perfect textbook reversal off the midpoint, and we're grinding lower. Keep in mind when we do test the close here and this pivot range from above, bulls may look to come in and try to squeeze one more time. So this is where bulls will be looking to come in, is to defend in this zone for a push higher. If they fail to hold it, you come down into the previous low. All right, let's take a look at the intraday time frame. So right now on the intraday basis, after the rejection off the 5340s the previous session, we saw price push downward throughout the day. And this is what we talked about in the trading room, is that every time price goes into that 5340, every time it goes into that 5335, right, every single time, you're likely going to see bears defend that day. Now you're seeing bears here defending the previous close, and price is holding below the 25% expansion level. We're sitting right on top of 52s at the moment, which has been a big time level. So any pullback right now likely to be a selling opportunity short term, unless price can push above 52.5. Pushing back above that level will open up a retest back toward 53.40. But right now, all bounces should be seen as a selling opportunity short term. Now, any failure to hold above this LVN here will be very, very important here. Because again, if we bounce up, the idea is for bears to defend and look to break through. If we break through this LVN, you can see the 5-day LVN right here. It's very important. That would lead to much more weakness ahead. And again, you're testing 51.50 as we mentioned, and then 51.02. And then below 51.02 opens up the previous week's low, which is quite a bit lower. So this could get interesting very, very fast if prices push through that 51.80. All right, let's take a look here at gold futures now. Here's gold futures. Let's take a look at the higher time frame. We talked about before, again, that bulls, responsive bulls, are they're getting whipped right now on the way down. They keep coming in to defend, which is good for short-term rotations, right? That's good for short-term rotations. However, it's not good for the longer term. Right now, we're seeing bulls defend pullbacks after rejection days, right? Right in our zone that we would expect. But again, I mentioned yesterday that if anyone buys down here, 57.5 to 58.5, that is a short-term trade. It's a short-term trade because every time we've done that for a couple of days, the third day has been a stop run day. Today could be that day. So if there's any failure to hold, basically 1157s, we could be looking at much more weakness ahead, and it could be another one of those two-day stop runs like we've seen before. Any break back above the pivot point, this is the pivot here for the previous week, rather the previous month. Any break above that pivot point, 1170, could spark a nice short squeeze again back toward 1190, because remember, bulls are trying to keep the lower end of this key range bid right now, and that's the hope, but it's been a hope this entire time. So there is an opportunity that above 1170 we can squeeze. I'm just not putting a whole lot of faith into that because we haven't seen that squeeze materialize. That could happen with the Fed today, but again, the range to watch is 1170, 1155, and for the most part, it's most likely to push downward. Above 1170 could squeeze very nicely to 1190, but even then, prices need to get back above 1200 for this thing to be serious. Any bounce will be seen as a selling opportunity by bears in the current trend. All right, lastly, let's take a look at the NQ. The NQ has been superbly bullish over the last day. We saw the rejections off of 4880, right? 4880 is this key level. We've seen several rejections over time. This one was picture perfect. This one right here started to play out, and then the retest into 88 and 4900. That's what we mentioned yesterday. Any push into that zone needs to be defended. If it is not defended, the trade's over and this thing squeezes. Again, we pick levels that have very clear edges, and if there's any push through those levels, that's it. You want great trade location. You want little adverse excursion. So when you are wrong, you cut the trade right away. But this one, again, had an opportunity to get in on the first day, scale, and then any second day move is on the balance of that trade, which is a break even. So at least the way we do it at PivotBoss and in Masters. This is how we usually approach a trade. What we talked about yesterday right now is we have a big trading range right now, and this is the highest we've been. We're starting to look like we're going to break out. So if we're going to appear like we're going to break out, we have to watch this midpoint. We have to watch 4900. Any pullback into that zone is going to be an area where bulls will look to defend. So this is 4910. Here's 4900. So any pullback toward 49.10 to 4900 could be a fantastic buying opportunity for bulls looking to further expand outside of this range. But any failure to hold 4900 would create a huge trap, and it's almost, high odds, 80% odds that we drop back against the range if that were to occur. So up here, got to be careful. You got to watch out. There's still an opportunity for a trap and a push back down. 49 to 49.10 is going to tell us a lot. If price pushes back, bulls are going to look to defend that area initially. Now, if we do continue to the upside, we have upside targets to play toward. 50.40 is going to be a big upside target to reach for. And then beyond that, we have 52.01, so 5,200 basically. Those are the next two major targets based on an expansion idea. But this is the point where it either goes or it fails, right? So the next upside target will be 50.40. Any failure to hold 4,900, rotate this thing back toward 47.30. All right, let's take a look at the intraday time frame, wrap this up. Again, we have Fed later on this afternoon. That's going to be very, very important to wait for. You don't want to be too active right now, especially on the intraday. We talked a lot about higher time frame scenarios. Right now, this is the previous session's close, and price is just chopping mostly beneath that level being defended. Anytime you get bears defending a level all at once and they're not getting paid, you see higher lows, I'd be cautious of a squeeze here, at least short term. But again, not a whole lot of pace and tempo, not a whole lot of participation. I'd be looking for fade the edges type of opportunities. If we push down to this LVN, it could be an opportunity to push back up. If we get out to this edge, it could be an opportunity to push back down. We'll see what happens here, but overall, not a whole lot to trade intraday at the moment. We'll have to see how that plays out after the bell, and then from there, look to see what that 1 o'clock central Fed decision brings. So overall, again, 49.10 is going to be the level, 4,900. If price drops into this zone, this could be a big-time swing buying zone for responsive bulls. All right, that's it for now. Let's see how it plays out heading into the rest of the day. Good luck and trade well.